we have a special guest today. She is a chartered accountant, a certified financial planner, and a trust and estate practitioner. So please welcome Jos Herman.
Oh, thank you so much for the invitation, Carmen. I look forward to sharing my knowledge today, and we'll have a little bit of fun.
Yes, in the next 20 minutes, we'll break down the difference between tax filing, tax planning, and tax legal advising. Explain the role of each and give you everything you need to know to choose the service you need.
So thanks for joining us today. We are going to talk about tax and estate planning.
Yeah. It's a big topic.
It's a very big topic. So we want to spend some time with you so that you can get to understand and hopefully, get those takeaways to help you in your tax and estate planning that you need. So I'm Jos Herman, and I'm joined by Carmen. So I want to, again, welcome you. And again, we'll start with some tax and estate planning issues that you might be facing as a business owner. Oh, the world of tax is ever changing.
Yeah, especially after COVID.
That's right.
There's rumor about increasing tax rate already.
Yeah, I mean, how do you pay for everything and whatnot? And
all the debts.
That's right, yeah. And we've got CRA audits already happening with some of our business owners. So our goal today is to have you informed. And you've built wealth throughout your lifetime.
Yes.
And we want to make sure that they protect it.
Yes.
Yeah, and that's most important. So when I think about this idea of taxes, Carmen, how do you think people feel about taxes?
Of course, headache. The less the better. Yeah, I think the biggest challenge the biggest question that they always have is whether they have done enough to save tax. And I always heard from my client that I already filed my tax with my accountant. Isn't it good enough?
And that's a great question. So, I mean, remember that we've got accountants that will always do your tax returns. They'll do your GST returns. So I hope today we'll sort of look and explore the other side of the tax and estate planning world that I think every Canadian should know about. So when I think about tax, I think of tax in sort of three ways. Every corporation has tax that they have to pay.
Yes.
And it could be 11%, it could be higher. And then we also think about if you want money out of your corporation, well, you have to pay tax again.
Yeah.
And so the third layer of tax is the tax we don't think about. As our companies grow, as our wealth grows, there's a tax at death. And we'll talk about that more, as we talk today.
It seems like we are tripling the tax.
Yes. So tax, and tax.
Yes.
Yeah. So what do I mean by that? Okay, so you're a business owner and you try and save inside your corporation. Well, guess what? CRA says we want some of that money. And they will tax that corporation at over 50%. If you have things like GICs or things like rental income inside your corporation. I bet you a lot of people don't know there's a 50% tax.
Oh, yeah.
So that's what we talk about with them, to say, what are you doing inside your corporation?
Yes, they already thought that they have they are enjoying the lower tax bracket like 11%.
Right.
Yeah, or 26%, even after $500,000, that they don't know that they might be facing a bigger tax bill when they are investing inside the corporation.
That's right. So again, tax and estate practitioners and financial advisors look at, can there be some efficiency there? But then you go, I'd like some money out of the corporation, right? I want to spend some money, maybe give to my kids. Well, then there's a dividend tax potentially. And right now in BC, it's about 49% at the highest top tax rate. So again, when I talk about tax and more tax, and like I said, there's that tax at death. This is our last one. This one's called the capital gains tax. And again, this has been going up in terms of the tax rate, and we're sitting at about 26-27%.
Yes.
So if you own shares in a corporation, those shares that you hold at death could be taxable. So again, our discussion today will be about tax and maybe some of these tax rates that you weren't aware of.
Yes.
Taxes at death. Do you think people think about that?
No, not right now, I guess.
They're more concerned about, are my employees okay? Or, can I get some cash flow in? What's my revenue?
Yes.
That's what they care about. But our focus as tax and estate practitioners is to have people think about, what is the tax when I pass away? And does it erode my wealth if I want to give to my kids? So this idea of capital gains tax really applies then when I pass away as a shareholder. Yeah. And so again, it's something business owners don't think about.
Yes.
They're thinking about other things. And so we want you just to look at a couple of examples that we'll provide here with one of the clients that I had worked with.
Yeah.
He didn't realize that there was a tax exposure when he passed away.
And sometimes when they realize the problem, it might be too late to change it.
Yeah, that's right.
Yes.
So again, identifying and then again exploring what some options that are available. So, when you think about my client Tim, he's deemed to dispose of his assets, his shares, at fair market value. CRA says, no, we can't. We're not going to say you can have $1 for the value of your company.
Yes.
And so what happens here? I want you to have a look at some of the example of the tax calculation that I had done for this client. So his corporation was worth about $5 million. Okay. And so he said, okay, well, I will figure that out. And then we have to minus what's called the adjusted cost base of the shares. And you can see in my example here, it's really low. It's only like $100.
Yeah, I think most of the companies, small business owners, started with a low
That's exactly
input.
it.
Yes.
Yeah, that's exactly it. So what we did, we just wanted to show him, okay, Tim, if I did the calculations and then we use that same tax rate that we just talked about, his tax bill is about $1.3 million if he passes away.
So it's like a quarter.
That's right. Gone. Because CRA knocks on your door and says, well, I would like that tax when you pass away. Yeah. And so Tim, unfortunately, his spouse had already passed away, so we couldn't pass the shares on to him or to her.
Yep.
So again, that tax exposure is something that Tim has to, again, plan for. And how do we deal with $1.3 million of tax? Yeah. So this is what I do. I look at tax and estate planning, right? Because again, if you think about, I got taxed during my lifetime, but what's that tax when we pass away?
So shouldn't this be the job provided by my accountant? Your role.
Right, yeah. Well, I always have people realize that everyone in Canada will have an estate, right? So Carmen, if I asked you, do you want your estate to be $1 million or do you want it to be $1? Which one did you choose?
$1 million. Isn't it obvious?
So I always ask that question, right? So we have to think about how do we enhance someone's estate. That's where I, have people realize. And so I want, any of my clients to think about their estate in 3 ways. We can give our estate to CRA. So you can see at the bottom there in the slides, CRA is not who we want to give our money to because they don't efficiently give it to our family.
Yes.
And they don't efficiently give it to our community or our church or whoever. That's where I think that if I give more to the children and more to the community, that's a better or more efficient solution in terms of choice.
Yes.
And that's where accountants like myself who specialize in tax and estate planning, that's where we focus on.
Great.
Yeah. So when I think about your tax and estate planning, I can break it up into different areas. So I don't do tax returns or I don't do financial statements like some of the accountants do. I look at things like, do you need a trust? Do you need a trust in your will? Do we need a trust during your lifetime?
Yes.
Yeah. We look at things like life insurance, which is a great financial tool. And then we look to say, are your beneficiary designations up to date? So again, if you have RSPs or TFSAs, are they to the right people? And then do you have a will? What do you think the stats are of people having a will in Canada?
I think only like half of the people who should have will have a will. But a lot of time, the will might have been set it up like 20, 30 years ago.
You're exactly right.
They're outdated.
That's right. They haven't updated it.
Yes.
It's, a long time ago, etc. And then even things like what can business owners do to protect themselves from their own health, right? So coming up with health spending accounts so that they can efficiently use their corporations for those types of expenses. That's some of the things that the accountants aren't looking at, right? They're too busy. But if you look at just some of the examples we gave here, That's not what they can do in their practice because, again, they're either too busy or they don't have the expertise in that.
Yes.
So when I think about my world of tax and estate planning, I do think of insurance.
Yes.
And as Carmen mentioned, I'm part of the Tax and Estate Practitioners of Canada. And we do look at insurance because it's a liquidity tool.
And also, I know that like life insurance has some special tax rules that is granted by the CRA.
That's right. And so we'll look what that looks like because it's very intriguing in terms of if I think of corporate insurance. So if you're a business owner, we can have insurance outside the corporation or inside.
Yes.
And the beauty of it is that any growth in the policy grows tax-free.
Wow. Free.
So I don't get to use that a lot as a tax practitioner in terms of tax-free.
Yes.
So tax-free growth, lovely to hear.
I think there's not much area that we can grow without paying tax in Canada.
You're exactly right.
I know the TFSA can do that.
Yep, your house, right?
Yeah, your principal home, but it might change.
That's right. That's exactly it.
Yes.
So when I think of those types of assets, and if I think about tax-free then liquidity, that's another layer of it all, right? So again, liquidity is so important. It's cash. Cash is king.
Yeah.
Yeah. So when you think about someone passing away, we want to make sure there's liquidity there for your family, for CRA, those things like that. And the most important thing then is, if I have corporate insurance, it can actually come out tax-free out of your corporation.
Wow. So you mean like if I implement a life insurance policy, then I can actually transfer asset from company to my personal tax-free.
That's exactly it. And so a lot of people don't know about that. And some of the accountants aren't always familiar with these attributes of life insurance. And why we're able to say that insurance is tax-free out of the corporation is because we've got this beautiful tax account. And it's called CDA.
Yes.
I want every Canadian to know what CDA is.
So write it down.
Yeah.
CDA, Capital Dividend Account. So Jos, I know that you used to work with one of the biggest accounting firm in Canada. So I think a lot of people would like to know, how do they help people to save tax? Do they use the CDA?
They do, right? So again, if they're a bigger accounting firm and whatnot, they have professionals like myself that specialize in that. But I guarantee that a lot of maybe the smaller accounting firms you're using or the bookkeepers, they're not always familiar with this particular tax account. So again, when I think of your opportunity to work with people that know about CDA, the ability to talk about tax-free dollars, those are people that you really want to work with. You'll still have your accountant, and they'll still prepare taxes and whatever else. But again, you do need the specialty professionals that are out there to help you understand CDA.
And the nice thing is, Jos, you can actually help them to explain to their accountant in their language.
Exactly, that's right. So when I talk about there being a capital dividend account, I have the opportunity then to say, we can then push out what's called capital dividends, which is a tax term, on a tax-free basis. And so you can see here that tax rate is 0. As opposed to taxable dividends, which can be, like we talked about 49%.
Yes.
So again, it's coordinating with your own accountants to make sure that we pay out tax-free dividends out of your corporation. And that's where good tax-efficient planning comes into play.
Yeah. If I actually interrupt a little bit. So how much tax, what is the percentage of regular dividend that they need to pay?
Yeah, so it's about 49%. If you wanted to have a $1 million inside your corporation and we had to pay out a taxable dividend like you see here, it's almost half to get it out to your estate.
So doing it right or taking advantage of the CDA can actually help you to save 50% of the tax?
Basically, yeah, potentially.
Wow.
So that's where, again, there's things like tax in terms of tax returns, etc. But tax planning is something that I deal with, and I partner with Carmen, etc. on it.
Yes.
So let's talk about the accountants again.
Yes.
Yeah. So think of accountants like doctors, where if you have a cold, you go see your doctor.
The family doctor.
Yeah, that's right. Much like accountants, where again, they do the bookkeeping, they may do your financial statements, etc. But like a doctor, if you do need brain surgery or heart surgery, they specialize, right? So now you see a neurologist or something. Just like accounting. You may have practitioners that just do the day-to-day stuff for you, but there is specialists out there like myself, etc., that really focus on tax and estate planning and are passionate about it. So again, I think there's lots of opportunities to, work with professionals. And again, if you think about the tax lawyers, right, because those are different, right? So I'm a CA, CPA, and the accountants do the tax returns, etc. But the lawyers are the ones that they draft your wills. They may do your shareholder agreements, etc. So again, it's a combination of all these professionals helping you in the tax and estate planning world.
Yes.
Yeah. So I think of then in terms of the options that I've explored with some of the clients that I've had, is you have to present some options, right?
Yes.
So what I did was, one of the clients said, well, you know what? I have excess cash in my corporation. And the cash flow that I usually generate, it's about $80,000 a year. And I said, well, that's taxed every year at about 50%.
Yes.
And they said, oh, and what would that look like? So I said, well, let's look at Plan A, this traditional thing of saving inside your corporation, you have excess cash, etc. So it can be done. There's nothing wrong with that type of saving. But we looked at an insurance solution in Plan B. And under Plan B, we said, well, what if you deposited that same amount of money, your same excess cash flow in your corporation? What would it look like then? Well, then we start to look at the net estate. Like, what would happen if you tried to push that money out of the corporation when you pass away and tried to give it to your kids, etc.?
Let's show the figures.
Yeah, sure. A versus B. There's a dramatic difference between what the net estate would look like under our Plan A versus what the net estate would look like under Plan B. So my last column just shows that difference, Carmen.
Let me see. Wow.
Yeah. So we're talking, it could be hundreds of thousands or millions based on the tax rates and etc. So I encourage you to think about which plan you would like, A or B. And it's funny, in this situation, the accountant said, I didn't know. And so they said, could we even do a plan for themselves? Because we showed them the numbers. We did the due diligence to show that this plan, under Plan B could work.
Exactly.
So it's all about the CDA. It's all about the capital dividend account.
Accounts. So you have to write it down? Write it down, yeah. CDA. Remember this word. It's going to help you to save millions of tax.
That's right. So I just encourage everyone to think about the questions that you have in terms of your own tax, what your estate would look like. I want you to think about, do you have a will? Right? Because then we would bring in a tax lawyer to, again, draft that if it's not up to date or if you don't have one. Do you need to update your beneficiary designations, right? So Carmen can look at that in detail.
Yes.
And then when you think about, are you a business owner with another shareholder? You need a shareholder agreement.
Yes.
So again, coordinating with a lawyer to do that. And again, I want everyone to think about their net worth statement.
Wow.
And you may ask, well, why would I need to think about that, etc.? So your net worth statement is your balance sheet. So for accountants, you may say that, oh, well, my accountant puts together a balance sheet, right, of your company or whatever. But we always encourage people to look at the balance sheet of their personal and their business life. So what assets do you have and what tax exposure do you have with those assets?
Exactly. So I know that a lot of the people only look at the number in the account.
Yeah.
But it's before tax.
Yeah, that's right. So we worked with a client And we said, okay, well, what's your net worth look like? So you can see I broke out between the personal assets that they have and the corporate ones. And they had never done that before, Carmen. They never wrote down, what do I own? And if I want to give it to my kids, what will it look like? So you can see in this example, they have a house, they have another rental property, and then they had just some investments on the side. But they also had two companies. One was just their operating company, and the other one was a holding company.
Holding company, yes.
So the number I show here, I did some rounding for everybody, and it's about 10 million. And that's just with a few assets. Yeah. So what I always do with this client, and any client that I come across, is I talk to them about what's the tax exposure at death. And so you can see here that I put some columns together. And I said, is there tax on your house? Well, for now, no.
Yes. But for the investment property?
Yes, exactly. And then you think about the investments. There could be, depending on the type of investments. And again, the tax on your corporations. Absolutely, there will be tax.
Yes.
Yeah. But don't forget about probate.
Oh, yes.
Probate is a tax. So again, things like real estate have that exposure. Your corporation shares have that exposure. So right now, it's about 1.4% of your estate. That is a tax, and it's something that, again, could we do some planning for?
Yes. And remember, it isn't included the legal and accounting fee yet.
That's right. That's exactly it.
Yeah.
So this is part of the exercise that I've done many, many times. And again, it opens people's eyes. So again, I want you to think about my client Tim here, who had that tax exposure just on his $5 million of shares. His tax bill was $1.3 million.
Yes. So if you think that your company or your business is worth like $5 million, then you can expect to pay $1.3 million tax.
Yeah, exactly. Without any tax planning.
Yes.
So again, I think about if your tax bill, let's say it's even $500,000, $1 million, $2 million, whatever the number is, I always ask people, do you have the liquidity to pay for that tax? So again, I want you to think of tax planning, and that tax liability is how do you then plan for it? Do you have insurance or something like that?
Yes.
To help.
Or tax efficient accounts that can build in your company.
That's right. So I hope everyone got a sense of a lot of the questions I get as a tax and estate practitioner is, how do I transfer my wealth to my family? Right? Very valid question. But more importantly, they always ask me, Carmen, how do I transfer my wealth tax efficiently?
Exactly.
So I hope today that you're able to get some knowledge. This is what I specialize in my firm. And so again, I thank Carmen for that opportunity to talk about tax, to talk about the exposure. And again, can there be things that we could do in the planning to save some tax?
Yes. We can always sit down with you and then draft a picture with you together and see how much tax we can help you to save.
So thanks very much for your time.
Thank you, Jos. Thank you, everyone.